Aloha, everyone. The stock market ended the week very strong. Strong week overall. The question we have to ask ourselves, which I personally never ask in the moment, unless I see real fear, panic, or capitulation. But the question everybody keeps asking me is this the bottom? I don't know. Maybe. Doubt it. We don't have the correct leadership. We have a lot of great leading stocks right now. They're just in the wrong group. Right now, your leading index is the Dow Jones Industrial Average. It's above all of its moving averages. That's a great sign. The bad sign, it's been a V-shaped rally straight off the bottom. And I just want you guys to pay attention to how every V-shaped rally has ended. Doesn't mean this one has to. And also, all of them have led to lower lows. Doesn't mean that this one has to lead to lower lows. In fact, normally, 50% retracement, you hold that. We hold above this previous resistance level, build a higher low. We have the potential for a higher high. But I want to remind everybody, the DIA being the leading overall index and the VTV being the leading ETF that I track, doesn't scream risk on. So just keep that in mind. Now, I just like to really, in this video lesson, go over the SPY, and I want to keep it simple for everyone. Look at the direction of the moving averages. That's all I have on this chart, by the way, are the moving averages, and then one key downtrend line. It connects through this January high, this March high, this August high. It hits all three levels, and it's slightly overhead. I honestly have been telling everybody, I believe we have room to run all the way to the 200 SMA, but we could easily overshoot the 200 SMA, just like we did here, and find resistance right at that downtrend line. What happens after that? I don't know. We've got a lot of good winning positions on right now, but that being said, I'm quick still to take my gains, trim and trail, and keep irrational, illogical stops until I am certain we have bottom. And in case, one more time, anybody needs to know when I will start to look for a bottom, an actual bottom, when this VIX gets above this red line, we can start looking for major reversals in a bottom. As long as the VIX is below this red line, I can't even dare try to call a bottom in the market. It's amateur hour. It's not what professionals do. I don't have a elevated equity put call. The 5-day average is in around 1. I don't have a reading of at least 1.2 in the equity put call. I don't have a VIX over 40. And I still see 0 real outflows in the equity inflow outflow indicator. We had a huge record amount of inflows from 2020 throughout 2021 and even throughout 2022. History suggests you have to purge at least a third of that via outflows. Once a market starts and enters a bear market after an extensive run full of inflows, you need to at least purge a third of that out before you bottom. So talking about a bottom is just, it's not a game plan right now, but we have a strong bounce. And I will show you something using moving averages. Once you clear a moving average to the upside, and once you start to stack properly, so here, the 5 crosses above the 9. Do you notice how once the 5 gets above the 9 acts as support? Keep this in mind. Then the 9 crosses above the 21. So now we should look for the 21 EMA to act as support. We'll see if that happens. But this is all a good step in the right direction, but we still have the key moving averages downtrending. The 50, the 100, the 150, and the 200 SMA. We got to get above all of them. And then to have a real good chance of a bottom, you got to start to see these lines flatten out. We got to get above them and then rotate higher. And guys, I had just happened to watch the Shalvaco Capital video lesson this weekend. If you guys don't watch it, if you have time, I recommend it. They do an Ichimoku cloud study on the weekly time frame that's very beneficial. And so let's end this SPY analysis with this. The TTM trend momentum indicator, TTM momentum indicator, it's just really just the momentum indicator added on top of the TTM squeeze. You'll see we got a great slingshot We were in a squeeze. We are now resolving it higher with a squeeze setup. Now, this is good. We're positive TSV. We're positive MACD. But notice how the CMF is still around the 0 line here. And I'm actually red on the indicator even after the rally on Friday. Compare that to the June rally here. We're red during the entire June rally. But notice whenever we really start getting going, the CMF gets well above the 0 line. We break out above this previous flat top resistance. It then acts as support, and we have that nice rally. We have cleared this resistance level, and we still have a negative CMF. So like I said, it's good short term, but there's a lot of, it's not that great. And then, of course, if we just go out to the bigger picture time frames, the weekly, I'm still bearish here. I'm still bearish here. TSV is green, but that downtrend line, the weekly 50, the weekly 100, the weekly 150, and the 200, at least it's above. But all of these areas are kind of confluencing around the 420 level. And then if we look at the monthly, at least CMF is still above the 0 line. This is why it still indicates to me that this is a secular bull. We have a cyclical bear in the middle of a secular bull. For that to change, I would need at least the SPY to stay, get below the 200, stay below the 200, roll over below this low to even consider. Well, once that happens, I will then officially declare us in the secular bear. But whenever I look at the monthly, this has only happened back in 2000 and 2008. We still have it here. We're red. CMF is more near the 0 line. We're not out of the woods yet. We actually have all the moving averages short term on the monthly to worry about. So that's where we stand with the market. But all of that being said, I want to remind everybody, and I reminded my chat room on Friday, and hence we had a strong close because somebody was like, every Friday we do this and then we reverse lower. And I go, do you know what the difference is? Today is October 28th. Why does that matter? Because from the close of October 27th through the January 18th close in the S&P 500, the average annualized gain is 22%. It's 25% since 1971 for the NASDAQ. That compares between January 18th and July 17th, which is only a 9% gain for the S&P 500 versus the seasonally bullish period of 21%. And of course, July 17th through October 27th in the S&P 500, going back to 1950, annualizes a negative 1.3% return. So as of Friday's open, we entered that bullish seasonality, and that lasts to January 18th. So as long as that's the case, I have to look at pullbacks are buyable, and I'm interested as long as the price action of individual stocks continues to confirm. And like I said, right now, we have some winners. The VTV looks good. The Dow Jones Industrial Average looks good. And of course, the IWM is showcasing its leadership. But overall, we don't have enough evidence to be like, oh, it's all clear. We're good to go. So at this part of the video lesson, I just want to show you that we have quite a few recent long positions really working. And I just want to remind everybody with these, I give all of these trade ideas out with a detailed explanation of the trade and exact buy, entry, and sell capital protection stop parameter before an advance notice I purchase in my personal accounts. Every evening, I tell you guys exactly what I'm getting long the next day, exactly where I'm getting long, and exactly what I'm risking to, what I plan on risking as a percent of my total account value, and where I'll stop out if I'm wrong. All before I enter the trades on my end. No front running. You get to front run me. I give the trade ideas to you on a silver platter with the exact entry, the exact sell stop, tell you exactly how I'm trading it, and I explain the signal. And then you go on your own. So with that being said, I'm going to review that process at the end of this video lesson with one new swing trade that I am taking Monday morning, if it triggers and fills, and how you could play it also. So before we do that, I just want to show everybody that we do have some stocks working out soon. And when they don't work out, guess what happens? We cut our losses. Rule number one is to always cut your losses. There is no exception. Hard rule number two, and really the only two rules I have, is to never fight the Fed. And the Fed is still tightening quantitative tightening. They're still running assets off their balance sheet. There is no real pivot. The inflation numbers and the data is still hot, 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 hot. I don't, until the Fed actually says that they're done with rate hikes and or they're cutting rates, there is no Fed pivot. So INGR was a new long signal here with this hammer candle. Or actually, was it? I can't remember actually. I don't even know now that I look at this. There. Okay. This was the long signal, the heavier above average volume, the increasing green bop, the hammer candle off the strong gap up day. We get long, gaps up on me. No fill. Why? My entry level is 81.87. That's my stop and my limit. I allow it to fill. After it pulls back, I call back on the order because it keeps its structure. I get filled, off to the races. So INGR, we are taking profits along the way, but from the entry date to where it is right now, there's an 8% gain there. But this entire trade plan detailed out. And if I get long here, where is my final stop no matter what? That low right there. So INGR is a winner. Here's one. I just got long. And guess what? I'll be taking profits Monday morning at the market. THRD was given out as a new long trade on Friday, triggered, filled, and worked immediately. 1 day gain, 15%. In this market, you must take profits once you're up 5, 10, 15, 20%. And once you're up 20%, I really don't recommend that you allow that stock to come back in for a loser. It's a little bit irrational and illogical right now because I normally use so if this would be worked right here, then there's a stop. Final stop would be here because overall, from the signal, the structure is still good. I want to give the stock room to work in a good market. In this market, now that we're up 15%, once we're actually up 20%, which we might have been intraday, that's it. The stock will never allowed to be go red. So that's how I really recommend doing that. BELFB. And by the way, these white triangles that you see on the screen, I can't add these post this move. So once I have a long signal, once I get filled, I put it into the system. I post my screenshots of all filled buy orders in my chat room. So there's no manipulating these arrows to match the current price action. BELF, since being long, 27% gain. Once again, do you guys think I'm taking profits Monday morning? I'm taking some profits. Absolutely Monday morning. Absolutely. DRN, guys, we consider this a great standalone signal. That volume truncation in the middle pane window, the max green bop on the bottom window. The problem is this is such a high ATR move relative to the recent price action, and it's an ETF. It's really tough to really have conviction in this kind of price bar. And here's the reason why. In a good market, right after getting this signal, you don't. And by the way, this was the original signal. So it filled here on this day, but this is the really great ad signal that we got. Look at this. Sketchy, sketchy, scary. But we hold that low and up, 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 and off we go. DRN, nice 18% move. IIPR was along off the low. Do you guys notice a pattern? Bop surge, volume truncation. Works in good markets, works in great markets. Not so much in these kind of markets, but IIPR, it is working. 10% gain. MODN, this was a breakout. Cup with handle, kind of a cheater breakout entry. MODN, 17% gain. Will I be taking more profits on the MODN? You better believe I am. Let's just do 3 more. CC, we all know this. This is what I consider a great signal in a speculative name because it's right at the 250. Great price structure, a volume truncation day. We hold that low. We have max green bop on the signal. CC is actually hitting a new closing high. Post signal, 94% gain. Actually, one more. We'll just do one more. CRBG, this was a CanSlim swing. This is an IPO base. Following this day, I told everybody I really like CRBG. If this was a raging bull market with CRBG, with this IPO base, I'm probably putting a third, a quarter, maybe even half of my account into this name. 6% gain in 5 days. Am I going to be taking some profits on Monday morning? Yeah. Why? I'm up over 5%. I have to. That's the current rule in this market. So with all that out of the way, I have one new swing trade idea. Will it work? I don't know, but this is what I see. NSSC is CanSlim quality. It's also in my perfect speculator scan. I have candle over candle here. I now have 3 candle over candles of bullish price action, a reclaim of the 50-day SMA with the 200 SMA still trending higher on heavier above average volume with a nice surge in BOP. Now I will ask you guys this. Is this a volume surge truncating the previous volume bar, or is it equivalent to this volume bar? No. Is this BOP surge equivalent to these BOP bars? No. So is it great? No. Also, earnings are coming up in the early part of November. So I have to size in with all of that in mind. Now that I've shown you this chart, let me go to my other telecharts. That same chart, my most important indicator that I really like is CMF. Is it green? No. But this is green. This is green. I have a slingshot squeeze going from loose to medium. Looks like it wants to fire. Here's what I'm going to personally do. I am still, even though I'm not completely lined up. Now, if I was forced to take only grade A setups and or everything has to be lined up per a risk manager before I could take a trade, then NSSC would not be along. But I can modulate and adjust my position size according to the overall tape and expectations of things working. Now with NSSC, you can buy this at the market on Monday open as long as it doesn't gap up. If it's indicating any kind of gap up, you do not want to pay more than 1 cent above the high of the day. You can pay more if you want. I would not, especially with earnings coming up. So 29.24 is the most I'd be willing to pay on this stock on Monday morning. You could buy half at the market and the other half if it trades up and through 29.24. But no matter what, you have to calculate your size to at least this low. You got to give the stock at least to this low to work. And in my opinion, since we're not completely lined up on this name, even though it is high quality, overall NSSC, I forgot, what was the composite rating? I'm looking at my other monitors, has a 96 composite rating. I love stocks over 95, so this qualifies. But you have to risk from the entry to this low. If I get filled and it doesn't keep moving higher immediately, I'm not going to wait to fully cut my loss with a move below this low. I'm going to start here, and then I'll probably have the final one right there. So that's what I'm doing going into Monday. Seasonally, we're bullish. Don't fight seasonality whenever price confirms. And as of right now, price action is confirming the turn into bullish seasonality. All right, guys, if you learned something in this video lesson, please do. Like, subscribe, share, comment. Any love, any support would be greatly appreciated. Love you guys. See you next weekend.